A lot of people talk about ICT concepts. Some say it works, some say it doesn't. I trade ICT concepts myself, so instead of arguing, I decided to test one setup properly. I backtested one ICT strategy exactly the way I trade it. Same rules, same risk, for 100 trades. One important thing before we start, ICT is not one strategy. It includes a lot of concepts. So I'm not testing all of ICT here. I'm testing one specific setup, used the same way every time. First, I have to start with the higher time frame, daily and the 4-hour time frame. I'm not looking for entries here, I just want direction. Based on structure and liquidity, I decide the daily bias, bullish or bearish. This tells me which side of the market I should focus on. For example, suppose if I have a fair value gap here, and the buy-side liquidity is also resting above, so my bias becomes bullish here. After the bias is clear, I have to mark out the liquidity level and simple wait until takes that out. For example, my bias is bullish, so I will drop down to 1 hour or 15 minute, and just simply mark out the liquidity level I have on this 4-hour fair value gap. This could be equal highs, equal lows, or a session high or low. Once liquidity is taken, I have to drop down to a much lower time frame. Here, I will wait for strong displacement. I want to see price move away with strength. This tells me it's a valid liquidity sweep. Without displacement, I don't have to look for entries. After displacement, I have to look for some fair value gap. I will enter on that fair value gap and target the buy-side liquidity of 15-minute time frame. I have to wait for price to come back into this zone, and then I look for my entry. I have to only trade this setup during the New York session every day. If the setup appears outside this session, I have ignore it. So this setup is rule-based. I don't have to guess. I don't have to force any trade. If all the rules are there, I have to take the trade. If even one rule is missing, I have to stay out. Once you understand this strategy visually, you'll realize this setup is not complicated. The hard part is waiting and still not finding any trades. For the backtest, I kept everything the same risk on every trade, same stop loss and target rules, no moving stops. Winners and losers were treated exactly the same. Now let's see an example of this strategy, and then we will see the results we got after the 100 trades. So currently, I am on the daily time frame, and the first thing I have to do is find the bias. Here I can see a fair value gap, so I will mark this out. After that, I can see buy-side liquidity resting above, so I will mark this out as the daily buy-side liquidity. So our bias is bullish, but how can we say that the market will go from this gap to the buy-side liquidity? For that, we have to watch the previous range. If you watch it closely, you can see that we had a sell-side liquidity sweep here. Now we know that sell-side liquidity is swept, the market retraced to a bullish fair value gap, and the buy side is resting above. Now it's clear that our bias is bullish and the market could go higher. After that, I will drop down to the 4-hour time frame, and here the market swept a 4-hour sell-side liquidity on the daily fair value gap. So I will simply mark this out. Here I can see a 4-hour fair value gap, which price has to retrace back into, so I will mark this out. What I am expecting is the market to retrace back to this gap and then continue moving higher. Now let's drop down to the 15-minute time frame. Here I can see sell-side liquidity resting on this 4-hour fair value gap, so I will mark this out. I also have a 15-minute buy-side liquidity above. But the most important rule is that I have to only trade during the New York session, so let's wait for the New York session to open. Now this high becomes our buy-side liquidity, so let me just shift it. Now the sell-side liquidity is swept inside the New York session. I will drop down to the lower time frame and wait for displacement with strength. Since displacement is a crucial rule of this strategy, I always have to wait for a strong displacement. If it doesn't get created, I will not take the trade. Here I can see the displacement, but there is no fair value gap, so I have to wait until the market creates a bullish fair value gap. Now that I have a fair value gap, I will mark this out. Then I will enter on this gap, place my stop at the low, and target the 15-minute buy-side liquidity I marked before. The market instantly starts moving higher, displacing through all the highs, and finally gives me the target. This is a clean target with zero drawdown, but I want to see how well it works in the long term. Notice how price retraced back to the fair value gap and then went straight to the buy-side liquidity. This is a clean example of this strategy. Now let's look at the results. I'll keep a clear view on the screen so you can see everything for yourself. This is the equity curve from the 100 trades I backtested using this setup. The first thing I want to say is, this is not a straight line. There are pullbacks. There are losing streaks. And that's normal. Over these 100 trades, the win rate came out to around 67%. But honestly, the win rate is not the most important part here. What matters more is how the strategy behaved over time. You can see that the growth is steady. There are periods where the account slows down or pulls back, and there are periods where it moves cleanly in one direction. That already tells me something important. This setup does not work equally well in all market conditions. When the market was clean and directional, the equity curve moved up smoothly. When the market was choppy or ranging, that's where most of the losses came in. So for me, this result is not about the money. It's about understanding when this setup deserves risk and when it doesn't. The biggest takeaway from these results is simple. The strategy itself is not random. The losses happen in very specific conditions, and once you identify those conditions, your consistency improves a lot. That's it for this video. If this helped you, make sure to like the video and subscribe to the channel. If you want to join my mentorship program, the link is in the description. And for any questions or doubts, you can join my Discord. I'll see you in the next one.